Good afternoon, Scott Redler, T3 Live. Welcome to the Conversations on StockTwits. I'm here with my better half, Vicki. Vicki's going to be commentating. She's going to be looking at the questions. She's going to be letting me know who's on board, who wants to know what. You know her if you're on the virtual trade floor in the T3 community. You know she's on my desk. She does a lot of work with me. She's in my thoughts. We put together off the charts. It's a very, very intimate relationship we have here. So I'm happy to have her here. Brittany had to take care of a personal situation. So I know with today's volatility, and I know with just where we are in the market, with what's going on in the world, there are a ton of questions. So I'm just going to turn it over to Vicki and let her just start asking away. So let's go, Vicki.
All right. First question is from Novice Trader. SBY is holding strong support at 32.79. This must have been a little before the close.
A little before the last 20 minutes of the day.
Yeah. Where do you see us going from here for next week? Thank you.
Well, what's interesting here is on Tuesday, we sent out a note when we went to about 1357 to 1363 in the SPX, which also went to about 136 in the spiders. We wrote it on the blog, we tweeted, I said, first time we get to 135.76 to 136 and a quarter, probably a spot to sell. It's the first area or actually the intermediate target of the inverted head and shoulders pattern that we've been watching. And what happens is when you get to a certain target, you never know what's going to happen afterwards. But if you act accordingly and you sell into resistance, if you don't chase the move, you never have to know what's going to happen like a day like today. Now, coming in today, I actually was a little bit more constructive on the market after putting out a sell note on Tuesday saying I'm net short, which I was, and I was very short yesterday. Unfortunately, there's a fine line in holding your trade, and because we closed okay, I was like, you know what, let me be in wait and see mode. So I do think most traders were in wait and see mode today, and if you were, you didn't get caught in this downdraft. You didn't get caught in the follow through of the disappointment of Operation Twist. And even if you came in sort of bullish, which today I was like, you know what, maybe we could hold here, flag, and go higher. The Philly Fed came out, and then the Goldman Sachs call basically coming out and saying, we're going to go down to 1285 after a big rally. It strikes fear into people. So if you take a quick look at the S&P or the spiders here, you will see, first things first is, we've talked many times about this two different patterns. And sometimes you have macro patterns that work out. And just to go over, here was your head and shoulders top. We talked about it until we were blue in the face, giving a measured move. Because sometimes measured moves get met, sometimes they don't. Remember, this was like 1420 to about 1360, which gave you a measured move down to close to this area. And then you had a bit of an overshoot. And then once we hit the low and we reclaimed the 200-day, we started to talk about this inverted head and shoulders pattern, okay, which is usually bullish, which it was, okay, where you had the left shoulder, the head, the right shoulder. And let's take a closer look here. Okay, you take a closer look so you can see the levels a little bit closer, and you will see that if you missed this first part of the move, we saw a little bit of commitment to the move, right? This was commitment. This was holding higher above the low. We talked about adding on a breakout up into what could be bigger resistance, and you had it here from 1330 all the way up to 1360, this is the day that we put the sell note. And then obviously this was Fed day. So you look across coming in, and there you have your 1360 in the SPX. So the reason people said to me yesterday, okay, or on Tuesday, that's when everyone started getting bullish. So if you come back to me, everyone was saying, okay, we're going to go to 1390, we're going to go to 1420, everyone's behind us, you have the stimulus, you have the central bank, you have the Fed, all these things. So why are you saying sell? I'm like, you know what? Because you don't go pour selling into resistance. You don't, blow up your trading account by taking profits in areas that could prove to be tough. So if you go back to the chart, you will see that if you go here, you'll the depth of this shoulder, which we talked about, the low here was what, 1306. Remember that held for a while. The high was right around 1333. So you would say about what, 30 handles. So if you take this depth of the right shoulder, sometimes all you meet is one of the targets. So you take this and you flip it higher. That's how I got to 1360, and it went to 1363. So that is why this was the sell zone. Okay, then we came in today saying, what's going to happen here? Are we going to hold higher? Are we going to flag to continue to what could be the measured move, right? The measured move of this overall pattern from the head to the neckline all the way up into this 1390 is the completed pattern. But you didn't have to be involved for the completed pattern. You could have said, I'm going to see if there's more commitment. I'm going to see if this area holds to put more money to work or keep money working in order to get to the proper area. And you know what happened? Today, markets opened up somewhat flat. You had a really horrible Philly Fed. Goldman wrote out a sell note. We took out this 1346, and you had to get out of the way. But for those that came in today saying, you know what, I sold some of my longs. It's been a nice run from 1266 to 1360. Some actually got short versus 1363 and said, beat me. And said, you know what, I'm going to be short versus that high. If it goes through there, you know what, I'll stop myself out. And you didn't get gyrated into the Fed news yesterday, because if you go back to the chart, the market never took out this high. So if you shorted right here, hold on. If you shorted right here, okay, or into this area, because remember we cost averaged in between that like 6-handle range, and then if you were short versus 1363, what happened yesterday? 1361, you never should have got stopped out. If you tried to save money, it cost you money. But if you didn't get stopped out, you got very rewarded for what today's action was. So I guess, Vicki, repeat that question one more time, because I gave you the little quick and dirty what's going on in the market, but I didn't answer the question.
Well, that one was where do you see us going from here and for next week. But since you're talking about the inverse head and shoulder pattern, Market 2012 wants to know, is it still valid or has this pattern failed?
No, well, part one of the pattern triggered. And sometimes you don't get part two. That's why we said sell that area. So yesterday, when we paused up there, I said, let's look at retracement rules. Let's see where the market pulls into, where we retrace, so we can measure the validity of the potential next move or of what just took place. So if you look at off the charts last night, which Vicki, you did a great job, we put retracement rules on the spiders, we put them on the Qs, we put them on the RTHs, and all the indices saying, you know what, let's see where we could buy a pullback, because a lot of people were chasing the strength into 1350, 1360. So I was like, you know what, now if we get a pullback, can we buy the dip? And where we hold will give us clues on how fast we move moving forward. So if you look at today's action, it's a little worrisome. That's why I'm flat. I covered my spiders short. I tried a few longs, got stopped out, and I said I'm out of the way because I need to see what's going to happen next. Because if you go to the chart, you will see, look at the potent nature of today's move. This was very, very strong. This took out the last 4 days. Typically, a move like this dictates direction, okay? Especially when it happens on day one. If it happens at the end of a move, sometimes, it could be the culmination of it. Like if you remember from here, you had what, 14, 15, we came all the way down, and then you had a very similar day, okay, back near the lows, and now is people throwing in the towel. So we reversed and then went higher thereafter. So here, this day is different because we just had to move up. So it just took out a lot of the fluff, but it's we're not even oversold, we're just about even. So I would say, if you look at the retracement rules, which we put out there, we blew through the 25% retracement. So let's go right, I'll put it up here because you could check out off the charts last night. We tried to give you a roadmap. We blew through the 25%, okay, which would have meant very, very strong move, very, very quick move, probably get here a lot quicker than those would like. So we blew through that. And we closed right around the 38.2, which is considered very strong still. You could still have a strong move holding the 38.2% retracement from the lows. But with the size of this move and the fear it's going to cause and the media and whatnot, I tend to think that we'll probably hit this 1315. So I think that's the next area. So moving forward tomorrow, I'm going to watch today's low as a pivot. Maybe we open above it, they try and push it below. If they can't, you could trade versus today's low, or they open below, then maybe they take a positive and we try and stabilize and figure it out. But for right now, if you went to cash or you sold your longs or you got hedged here, that was the prudent thing to do. And now we're back and wait and see to see where we make the next pivot. And at this point, nobody really knows. All we know is that from here to here, you had a nice calculated move to retest the neckline. And now I would be more flexible, active trading, and not stubborn.
Okay, so you've answered several people's questions now with the S&P.
I do get a little diarrhea
top.
of the mouth sometimes.
But let's go to Apple. David P3 wants to know, do you expect Apple to find support at the 50-day, 575, or what's the next likely support point?
Well, those who are in the community know that today I tried to be long Apple. If we held up We both tried to be, and we both lost money, and it is what it is. It was worth trying. It was tight. It was hanging in there, thinking to myself, end of the month, maybe they try and mark it up. But the market didn't hold higher. We didn't hold the upper floor. We didn't even hold the 20%, 25% retracement. So obviously anyone in anything is going to get a little bit worried. So if we continue lower, I doubt that Apple's going to be able to hold this upper level. So for me, my stop was at 580.50 where I got flat. So if you look here at Apple, I think you have to be just a little bit careful. There's like a tale of two different tapes here. If you look real close, you will see that first time I got really excited about Apple was right here when it held the 100-day, when the market was going lower. This was your buy price, and then I remember even selling it to here. Then you had this reversal. Remember that reversal? We had this on the price point sheet at 560 and a 52. It was a good short, and then it reversed up, giving you a RedDog reversal that actually controlled the tape all the way into that conference. And then into the conference, they sold the event, but we had no downside follow-through, and then we were holding higher. Earlier this week, nice trade through the 50-day. And then I was thinking if the market held in there, which it didn't hold in there, that we can get a move above 590. And you know what? It didn't happen. So at this point, I would say you have to be a little careful. You could say that there's this uptrend in place or a series of higher lows in place from this bottom here that was put in on 518. You have a low, higher low, higher low. So if this were to break short term, you could see pressure back to at least this 570, or maybe even if the market goes down to 1315 or so, maybe we retest the 100-day, which is all the way at 562. So if you're long from here, you really don't care because you're more of an intermediate / macro holder. Or if you're long from years ago, you don't care. But if you're a short-term trader, if we break this area, I know some guys will probably use today's low, excuse me, as a pivot entry. So if we opened up and traded through today's low of 577.44, people will try and short it. And then you have to see what happens here. The 50-day, which is not on here. I do not know why. Someone was in this room while I wasn't, so I'll put it back in the 50-day. You go here, you go 50, you go OK. And the 50-day is now at 575.19 like you said. So use that as an example. Sometimes it trades around it for distribution, but at this point, I would say watch this area because it's pretty crucial in terms of the short-term direction. And if the market's going lower, this is not going to hold this upper area, and probably we'll see a bit more of downside.
Okay, moving on to Medic E11. He wants to know what would be support for Dunkin' for a long entry now that it has come in some. Thanks for the training.
Oh, nice. Well, Dunkin' has been a stock that we talked about as a IRA type stock, a macro hold. They're definitely, you still have to enter and exit the right way. And recently it had a major move, a breakout above 34. So we did say, everyone likes my term that I use on Twitter. I say, trade some, trail some. This way you could book some, feel good, and then stay with some if you're never going to get out of it. Okay, today it did have a potent move to the downside, so it took out some of the fluff. If you look here, you will see that not the end of the world. Okay, so if you had a high level stop, most people with that high level stop probably got rid of some shares when it broke below this 36.20. But all we're here is now at the 8-day. If you've missed this trade and you want to get involved and you didn't chase the excitement, I think good job. As you see, sometimes Dunkin' tests levels. First time we really started talking about Dunkin' to buy it was with this nice cup and handle pattern. Here's your cup, here's your handle. It started breaking above 29, gave you a nice move, retested it. Next nice trade was when it broke above this resistance. So today it had a potent move to the downside because a lot of leaders got hurt. I would say if you're not involved, look to buy it right around here. This area would be a retest of the breakout right around 34. So a move from 37 and change down to 34. This would be an action area to see how it performs and an area to buy the dip, especially if you didn't chase the excitement. And hopefully you sold some of the excitement because that's what we try and do in this market as professionals. We embrace volatility and we sell excitement. We don't buy it.
Mm-hmm. Okay, so going on to EDO 374. He wants to know about soda. Still strong? Any thoughts? There's an over 70% short float.
Mark Sperling, who loves to trade, he does
Mm-hmm.
love stock. He loves heavily shorted stocks because when they move fast and move furious. And I know that he was targeting it for a trade It's not an investment. The stock is broken. The stock's not above moving averages. The stock hasn't been acting well, but it's a shorted stock with a price point. There's a trade there. So yesterday is when it triggered. So if you look at the chart, you will see that soda had a nice tight pattern, and it broke above this area. So if you were short versus 36.08, you probably said, oh my goodness, I got to cover. So it was a good trade yesterday. Then today, it tried to push through, get momentum to the upside. And we all know what this little strategy is here, or this little price pattern is. It's that outside RedDog reversal where it pushes through, can't hold the momentum level above the previous day's high of 38.19, and then trades below. And that's your sell signal. And if you look really where this came from, went from 30, showed you some commitment, gave you an extra trade, small sell signal. If this stock's any good, it won't give back much more than this, because you never want to see more than 50% of a wide range bar get taken out, because that shows you no commitment to what some thought was exciting on that previous day.
Okay. So I'm about to butcher this name, but
what's the name?
Audubon Querbis, maybe? He wants any hints on Lulu.
Lulu, before I look at it, I'll tell you that this is one of the stocks that was a chosen stock that started acting faulty, that started to give up all the moving averages, had an earnings report that wasn't great. And it to me is in somewhat of the penalty box, and it's not something you could just go to it all the time. I know it did have a little bit of a rally, but I think you have to be a little skeptical of it. I've seen this happen to many leaders in the past, so you want to be careful. And if you look here at Lulu, you will see that first clue here was the breakout failure, right? Any stock that goes and breaks out and comes right back, sometimes it retests here and goes, but not only did it come back here, it came right back into the base. So right there, that was a signal that maybe it ran its course for now. And then, I remember we were talking about it when it broke this area, okay? When it broke this little rising channel here from this gap, okay? And then that was your sell signal. Came down, retested, and then failed. And now, if you look what happened here, what did it do? It came down to the 200-day. Excuse me. I cry because I love Lulu's clothing. Anyway, not really. It came to the 200-day. If you chose this as your final area to sell, sometimes it's a trap. And from there, it had a nice bounce back. At this point, I'd say it still looks sort of broken. It still didn't fill the majority of this gap, so this gap still controls the direction. And for right now, the direction could be to the downside. So those of you who are short, I would say stay short versus 65, 67 right here. You could probably add to it if it were to break below today's low of 62.91. And those of you long, who went long versus this area, use this as your stop. So just simplify it. And if you're in a macro position, I would tear it down.
Okay. Moving on to Erica Lex 97. She wants to know, is the daily pattern on Amazon still okay to move higher?
There are two patterns here. One is the macro pattern since the earnings. It's held the earnings gap, and it's holding above the moving averages. And when the stock or the market wants to be strong, Amazon has been that stock. Today, just like Apple, just like a few of the other strong stocks, they tried to have faith in it. Even me, I didn't actually buy it. I was waiting because I wasn't so convinced that we were going to hold in there. And Amazon tried to break above the level, but once you get above a momentum level and fail, it's a short-term sell signal. So it doesn't mean it's a macro sell signal, just short-term. So if you look here in Amazon, you will see that this was the earnings gap right here. Guys made money short on this day, and then it actually controlled the direction all the way to here until finally you saw a nice potent day into the moving average, which controlled the direction to the upside. And then today, just like most other things, it gave in. It tried to break above, couldn't. So if you take a closer look here, you will see that some people probably got short when it broke above this 225.20 and couldn't hold it, or if you tried to get long it, you got out, and it closed in the lows. So for now, I would say if you're in macro, being tier 1, it still looks fine. If you're trading for cash flow, some guys might have even taken out short. It could test this moving average coming into 217, or it could even come back to to this 213 and still be okay, as it still has a lot of the gap unfilled, and it just needs time for the market to get a bit better, so it could trust breakouts in some of these high beta type names.
Okay, we're going to take a quick commercial break, and we will be back in a minute.
Sounds good.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders to understand how to develop an edge in the markets so you can put your money to work with confidence. The T3 Live approach includes a mix of training, trading, and technology to help you learn to recognize, adapt, and ultimately take advantage of different market conditions. So what actually separates T3 Live from other educational firms? For one, transparency. We show all of our positions live, so there's no smoke and mirrors. Basically, we put our money where our mouth is. We have to because we're regulated by the SEC and the Chicago Board of Exchange. Number two, we're real traders. You'll be learning from real professional traders that make a living trading their own proprietary trading accounts, not just instructors that don't trade. Your goal should be to associate and learn from big traders who can teach you how to take your trading to the next level. And three, credibility. Millions of people turn to places like CNBC, Wall Street Journal, Fox Business News, and these outlets actually look to T3 Live for information. No other educational firms are asked to be a consistent contributor. We at T3 Live would like to get you started with a step-by-step method that has been proven over time. The same blueprint for success that I've gone through. It's not a weekend seminar, it's an approach, a mindset, a process to show you how to take control of your financial future. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our Foundation 30-day online home study course. The reason I'm willing to give you such a valuable course for free is I'm sure that once you complete the program, you'll want to continue your education with our team. All you have to do is fill in your name, email address, and I'll see you on the other side.
Okay, we're switching things up and we're back with Evan Lazarus, and Scott's going to take a break for a little while. Going back to retail, since we just talked about Lulu, Market Picker wants to know, what do you think of Nike breaking lower? Any good entries for long? Thanks.
Let's look at it. NK, it's a stock we've been talking about in the VTF. Breaking down, averages down. This is a classic 3-bar sell setup right here. You know, you get that impulse down, 2-3 bar bounce into a declining 8. Rejection today. The stock's going lower. Don't step in. Don't try and pick a bottom. The stock is going lower.
I agree.
Glad we're on the same page there.
Yeah.
As far as support goes, I mean, if we're just going to go back to it for a sec, there is, it'll probably try and flirt with this level, which is really where it broke out from, which isn't too far down. And then, below that, there are these pivots back here around $90, which I think will be a little bit more formidable support. But again, this isn't the type of thing you want to mess with. Notice how volume expands on the down days. That's enthusiasm, that's commitment. That's something you want to be very, very careful about trying to pick a bottom. What else we got, Vic?
All right. Well, there's a little question for me here.
What's the question?
All right, so Rick Johnson wants to know, would we be shorting the market here? So, Scott talked about his inverse head and shoulder pattern, which was valid and gave us a good entry for, Friday into Tuesday. But what I noticed today is from a couple days ago even, if you put the April high to the June low, the retracement levels there, Tuesday's high of 1363 was the 61% retracement level, showing, there's still commitment to the downside. And then after today's move, not knowing that would happen, I wouldn't be looking to buy that bar immediately. So, hard to short tomorrow because you can't chase a move like that down. But I would think after a day or two, if it slightly grinds higher, it could be a possible short entry.
I would agree with that 100%. I can actually highlight what she's saying here just so we can look at it visually. This is, again, your prior swing highs, your April high, your May high, down to your, June lows, where we saw that, what was a little bit of a bloodbath kind of a trade. This is when we saw Apple, trade down to the 520 area. We've since retraced 618%. 618 is the golden ratio. It is a very, very widely watched retracement. And you can see just that, that level just flexing its muscle. One day after Fed, one day after, Mr. Twisty gave his little QE3 Operation Twist, song and dance, the market reacting very violently and basically telling everybody, in my opinion, what it thinks of the shenanigans in Washington. It didn't work the first time, didn't work the second time. It's probably not going to work the third time. But that's neither here nor there, as we are really price action traders and we have to respect the movement of price. Vicki hit it right on the head. 62% retracement, big sell-off day. This is a day to take note. Now you want to look for sell setups to develop over, maybe the next couple of days, You might see some follow through to this, to this afternoon, early into tomorrow morning, but I think traders might look to step in for a quick trade or a bounce. As generally, it's you don't get two of these large bars consecutively after each other. Now, look, anything can happen. However, I think, smarter traders are probably going to take it down to a 60-minute chart. Let's take a look at a 60. Let's wait for like a 3 to 5 bar bounce on a 60-minute chart. That would basically be, a half a day to even a day of some contraction, some sideways movement. Let some of the averages catch up, as we did see some real commitment to the downside today.
Okay, sounds good.
Good answer, by the way.
Thank you. JJ Dow wants to know, let's talk about some home builders, please.
Okay, let's. Toll Brothers, and we've talked about this in prior Stock Twits Q&As. I've talked about this in some of the morning calls that I've done. This to me, again, just looking at Toll, bear flagging here. I would anticipate, a little ABC correction. Again, you get this big impulse down, A up, B down, that's a higher low, and then you get that C trade, which just takes out the top of this and then fails. So this is, textbook technically, in my opinion, and it does speak of lower prices to come. Depending on the type of trader you are, you can, be short and run stops up here. You can look for a break of this lower trend line. I mean, there's different ways to trade this, but this to me has all the makings of a bear flag in a situation that, has the earmarks of lower prices in the not too distant future. You have support down here around 22. So we can look at Toll Brothers again. I can go on. I can look at the, the HGX. The housing index. To me, it's going to be very hard for these stocks to make forward ground if you don't have that market on your side. Look, in a true sell-off, in a true weak tape, if that is what this becomes, nothing is safe. Everything's going to go lower. And I think you got to watch some of the ones that have the weaker patterns. Lennar, to me, looks like another one of those ABC correction type trades. And you can watch for a break of this, near term or the shorter term, rising trend line for, some momentum to kick in or maybe some, more impulse.
Okay. Erica Lex 97 wants to know, Laz, you covered DLTR and FDO earlier in the week. Are these still holding in okay?
Trade's over. Big move here in dollar trade. This is what I have up on the screen. We had a real nice trade here. You can't. Look, at some point it's going to pull back. At some point it's going to correct. The stock went from the low 90s to about 115 in just a few weeks. And this is the kind of thing you have to be careful of. You don't want to chase. The last 2 days, selling coming in. We could see down into the 21 MA. If we go up to a higher time frame, a weekly chart, again, a little bit of a 2-3 week pullback, a correction here wouldn't be a surprise. And I would be very, very careful. Again, this has been a long-term uptrend. This isn't a near-term thing. This has been going on for quite some time. Again, go back, look at the last 2, 3, 4 years. Dollar Tree has been in a nice, steady, incline. And, you don't want to be the one buying the highs. I'm not saying the highs are in, but you have to be careful about a pattern like this. This is a very, very tight ascending channel. And these generally tend to break to the downside after they've achieved some sort of, pivot high. We're into that upper band here. You can make the argument we could trade, start to trade down. So I'd be very careful about being a buyer of Dollar Tree and anything in that sector. We caught sort of the tail end here. I'd be very careful at this point.
Okay. Moving on. Autovan Querbis wants to know, if we continue lower, what's the best stock to short?
the best stock to short. Look, there's 5,000 plus symbols. I don't know if I can fairly look into my crystal ball and say I can give you the best. But we can go after higher probability shorts. I think that's really the more appropriate way to look at it, not the best. Stocks that have been, weak and declining. Again, off the top of my head, again, I haven't done a whole lot of preparation for this question, but you can look at Baidu, declining averages, really no bounce over the last, 2, 3, 4 weeks while the market has, retraced about 62%. This one barely could get out of its own way, and in a matter of 2 days, right back to the lows. So this to me has all the, the earmarks of lower prices. You can look at some of the, the weaker stocks, GMCR breaking down again, Netflix breaking down, again. Goldman Sachs actually one that I'm going to key on. Really no bounce. Look for the ones that haven't had any real retracement over the last, 2-3 weeks, and those are going to be the ones that are going to be your go-to shorts, as they are the ones that had the most relative weakness to the market. And when we see selling, they're probably going to be the first to, sort of fall out of bed.
Yeah, I kind of have VMW on my radar.
Oh, I'm sure there's tons of them. VMW,
Low moving averages.
CRM, not much of a bounce. There are lots of different stocks. This is why you got to do your homework. Off the charts, the newsletter that we send out every night is a great place to find some of that what we consider low-hanging fruit. The VTF intraday, you're going to find some of that low-hanging fruit. I don't think we can say the best, but there are higher probability. Again, as a trader, think in terms of probabilities. Don't think in terms of exacts. This is a business of probabilities, and you want to find stocks that act in accordance with becoming a higher probability long, a higher probability short, that you can fit into the piece of the puzzle so that you can make sense of what it is you're doing.
Okay. Misco Jones wants to know, Citi hit the 50% retracement from the high on April 27th to the low on June 4th and reversed. Would a calculated move take it to 20?
Let me take a look here at Citi. I mean, it's not a strong stock. We're going to put it into that sector. Banks are not really where money flow is. It's actually the opposite. You have this pivot down here in Citi at 24. You can see we've held it a couple of times just above 24. You could make the argument building a little head and shoulder pattern in here. Here's the left shoulder. This would be the peak of the head, and ultimately this would fail. And we'll see. And again, this is really more about time. A confirmation would be a break of support of this, flat support level. That essentially could take this stock much lower. There's your measured move. Again, I'm forward looking here. I'm dealing in probabilities and possibilities. You have no exacts, but this is something that really could do a pattern that could do a lot of damage in Citi. So we'll keep an eye on how this plays out. Again, this right shoulder pattern, breaking sort of this short-term uptrend today. You can see, sticking down, and we'll see how this plays out in time. Right now, I think a little time will probably make this picture a lot clearer.
Okay, let's stick with head and shoulder patterns. And Misco Jones wants to know, on a 30-minute Apple chart, do you see one starting to develop?
Who answered this question?
Misco Jones.
Oh, Misco. Let's take a look here. So here's our Apple chart. We're going to go really more short-term. And I was looking at this today, actually. Again, the possibility exists. I don't necessarily know we're there yet. You have this support level down here. Where we stand right now based on today's price action, again, we broke our near-term support right here at 580. I'm not sure why this candlestick's probably not accurate. Let's take a look at a smaller time frame. Right, so here was the close around 577. You're in this pocket now. You have a void, a tradable hole. We can see down to support. Support, like I said, is down at these lower mid 570. I'm sorry, even lower 570, 567, 568. You could make the argument this would be the left shoulder. Again, you have that flat support. This would be potentially ahead. But this pattern is very far at this point from, being fully developed. You still need that push down, and you would still need that, right shoulder to develop off of this flat support. So it's a little early to make that call. Let's evaluate when we have more evidence and more data to support that, making that call.
Okay, sounds good. We're going to take a quick commercial break, and we'll be right back.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, we're back with Laz and the RedDog now. So let's move on to.
How'd you get here?
I'm the salesman today, so bring the camera in on me, because with the. Get in here, so let's see the shot. Gotta get nice and tight because we're one big happy family here. And Vicki usually is not here, so in the spirit of Vicki moderating today, I was told that we have a special.
You're welcome, guys.
Yes, because Vicki's here and Vicki helps with it and compiles it. So helps and compiles. Put those two words together, and this means off the charts. A lot of people say they love the product. It's a very low entry product into our community. It goes out every night. You can get it emailed to you by 9 o'clock. Actually 8 o'clock. 8 o'clock, so that means you can go over it. I was told by the powers of will that if you email info at t3live.com and you put in that box OTC, you could get 1 month of Off the Charts for free. No credit card, no nothing. 1 month for free, get to test it out, and that's all you get. Then hopefully you'll see the value that it adds, and that'll be just a little bit of an introduction to a lot of our other products as well. So anyway, let's go back to some questions from Vicki.
Okay, we have a question here from Aloha Trader, and he wants to know a little bit about your RedDog 80-20 reversal trade, and then also wants to know what does the 80-20 refer to.
Okay, so that's a two-part question, and I'm going to try and think of an example that happened today. First of all, the 80-20 reversal trade is a counter trend trade. What it does is it gives you a calculated plan on how to make a trade on almost like a counter trend direction without having to cost average into a short that sometimes you never know how high that stock's going to go, and that could put you out of business. Same way, if you try and think a stock came in enough and you're like, oh my goodness, I want to cost average in here, I think it doesn't go any lower, and you can get put out of business that way. It gives you a calculated strategy on how to enter to catch the reversal move for either a day-and-a-half trade or more, both directions. So I'm going to just quickly go to Facebook, which gave you a RedDog reversal, and it amounted to a swing trade as well as a cash flow trade. So if you go to the chart of Facebook, you'll see that if you remember, if you go to the blog, we talked about trying to find a bottom in Facebook. And you had the reversal here. This was the crazy IPO that Morgan Stanley screwed up, the Nasdaq screwed up, everyone screwed up. But you didn't have to screw it up if you were trading it. First move was here. You had a nice little bear flag, a little chart pattern, that a continuation. So people are like, okay, from 42 down to just say the 30s into the 20s, how can we find some type of reversal pattern here? How can we get a counter trend move from 40 or so down to the 20s? So here is where it happened. Okay, this was the first time it happened. It went as low as 27.86 on this day. So on this day, it broke it. So anyone trading long versus this level got out. Anyone thinking it's going to break 27.86 and go to 20s got short. And what happened? It reversed. So this little pivot area, 27.86, was a major action area for day trade and maybe more. On this day, okay, if you would have bought when it reclaimed 27.86, you put your stop in at 26.83. So right there, about 80 cents risk for what wound up being a close of 29.60, gave you a nice cash flow trade. So day traders made money here, but guys trying to swing it for a day and a half or what could have been a potential swing entry for higher prices got hurt a little bit on this day and then got stopped out here. No big deal. You could have tried it again. This time it worked out a little bit differently and you didn't even have as much risk. It broke below the low here at 25.75, went as low as 25.50, because let me just tell you the psychology of it. At that particular point, if you come back to me, you will know that a lot of people are saying Facebook's going to 17, it's going to 10. In order for that to happen, what did it have to do? It had to break 25.76 first. So those looking to pressure after a move from 43 down to 25.76, they're shorting it there. Those who tried to play it for some type of bounce said, oh my goodness, it just broke that level. Now, I got to get out of the way. That's why it becomes an action area, because shorts that chase press, guys looking to buy a bottom, get out, and then what happens is a reverse. To go back to the chart, you will see a reverse on this day. So some people that bought when it recrossed 25.75, all you had was a stop at 25.52, like 25 cents. So on this day, you made decent money. And then the way the rule goes is you buy here, you put a stop at the low of the day if you're a swing trader, and look what it wound up doing. It wound up going all the way up to 31.84. So for something that had 20-cent risk, gave you a nice day trade. Not great, but nice. It was actually a better day trade this day, and this day was a little bit more muted, but turned into a nice swing trade low that gave you about 5 or 6 points on 20-cent risk. Not so bad.
We actually teach that strategy in the active trader class.
And we do. And we could show you 10 other different types of scenarios, different charts, different stocks. I just picked Facebook because I know that we blogged it, but the active trader course is a situation where we teach you these strategies, so when we talk about it on the virtual trade floor or in our products, you actually understand it and you could own it more, where you could put more size behind it instead of just trying to do what we say. You understand why.
Okay, shifting gears here, Diablo 4 wants to know, what are your thoughts on GDX and the miners?
Is that to me or to the Lasbo?
Both of you.
All right, well, I'll go quickly first. Okay. First of all, the gold and the miners, they've been a very sore subject for a lot of the bugs out there because they're probably bugging out right now because they thought if the economy gets worse, if Europe starts to fall apart, a safe haven would be gold or the gold miners. So, I know for one, us, we've tried to maybe trade a little long if we broke the downtrend in gold because we know when stocks make a new direction, it's powerful and you could stay with it. So the first question is gold, or it wasn't really in there, I'm just throwing it in there because I've been watching it real close, has been under pressure. It's been in a macro downtrend, an intermediate downtrend, and now it's starting to accelerate to the downside. So if we go to gold, you will see that ever since we talk about outside days and potent moves, all right, gold put in its outside day all the way up here. So let me move it right here. After a big move, that was accelerated to the upside, it came back up, whatever. Here was your outside day. Since then, you had a high, lower high, tried to break above it on this, put in a double top. And then remember that Fed day when they said no more QE, look at the size of that move. This was your potent down move that engulfed this entire area that controlled the future direction. And then since then, it's been caught in this downtrend that has not violated it once, okay? And people who have been following this have made a nice amount of money shorting this trend. Because look at what's happened here. It's controlled it pretty much the entire way. Yes, it looked a little bit like it could have gone here. Sometimes I lost money trying it. But last time it just got up here, it failed. And rightly so, because Fed said no more QE and we can't eat gold and who knows. Anyway, what's the rationale is all of a sudden it failed. And now I would say if you look here at gold, it's kind of in no man's land because it just broke this area. If you made money short, I would have covered a little bit here. It just broke above the recent area of 153. Next major is 148.5. If you go to your monthly chart, you will see that this is a very dangerous area. Okay, we've drawn this many times. To me, this wedge was broken to the downside. It's been hovering. This breaks this 148.27, 148.50. Your next move, really, it's probably lower, but you have 140, which is 8 points, and then who knows? People are even talking about 1,200 for gold. So you have this macro trend that's been in place for a long time. It's been in a 10-year bull market. This trend comes into about 120. This accelerated trend, really was broken, and it hasn't been able to get back above. So to me, I think it's dangerous. And if you want to quickly just go to the miners, if gold's not going to be doing so well, obviously the miners are not going to be, making some nice moves as well. And right here, you had a decent sized move off the low. It sort of broke this a day or so back, just broke this pivot support. I would be out of the way, and I would just think that, let it be in wait and see mode and don't commit too much money. And miners are hard as it is. They always have a secondary, a mine blows up. Governments want to nationalize them, so you try and pick those individual miners. I know I've been long many times, and I've walked in the morning to a blow up, so I kind of stay away from them.
Laz, any thoughts on gold miners or? No.
I think Scott hit it on the head. As far as the actual precious metal goes and the GLDs, there's really nothing healthy in terms of price action there. Every bounce that we've had short term lately has been sold. And when you go up and you look at those higher time frames, when you look at the weekly or the monthly charts, you're starting to see things are beginning to change. Your averages, again, look at your 8 and your 21. Let me take some of the lines away here. Starting to curl down. Again, doesn't have that same feel that it once did. So price is beginning to tell us a story, and the story is that something's changing. There is flat support down here at the 148, like he mentioned. You can make the argument you have a little bit of a descending triangle here. This to me smells of lower prices. I think it's just a question of time, and it's a place that, again, just to reiterate, we've had a very, very long sustained bull market here. A corrective year, a corrective 2 years wouldn't even be that much of a surprise if you look at your retracement levels, just to get an idea of where we could go and still remain healthy. A 50% move would be back to 113 and 131 here. So these are pretty substantially lower moves, and I would steer clear.
And one thing as I look at that, because you talk about that, or we do in our active trader course, the 8 and 21 day, if you look back at this chart, it was riding it, right? Let's just take the Fibonacci right out of here real quickly. If you look at this, it was remove.
You have to right click on this.
Okay, Laz will do that for me because he's in control of the wheels of steel there. It was riding above it, right, during what, the last 4 years? And right now, like you said, it's starting to roll over and get below it. So it might end up riding it down. Plus, it's also coming into the 21-day. So I would think when they collide, there's going to be some kind of actionable, event here. So really make sure you write down this 148.50, because the way it smells is as an actionable event to the downside, not necessarily to the upside.
Okay, sounds good. Switching gears, we're going to Miracle Mind.
You're so serious.
I take this stuff very seriously.
Yeah, okay, there you go. That's what Laz usually does. He's usually smiling. Okay.
Well, Miracle Mind 007 wants to know, what are your short and intermediate term thoughts on eBay?
Okay, I could do that one. eBay, you could probably do that one. How about Vicki? Vicki, you do your short-term thoughts on eBay, because she's put it on off the charts so many times. We'll put it on the daily chart. We've had many rules. We've had many different types of strategies, and sometimes it's a great trade, and sometimes it's a no trade. And what did we talk about in off the charts, Vicki, for eBay?
I mean, yeah, this has been on our radar for a while as a breakout above 42. It was holding its earnings gap from April and had an uptrend in place since like January. So our trade was through 42, which happened, I think, on Monday with follow through on Tuesday. But I mean, with this, if the market remains under pressure, the stock could also come under pressure. I don't know. I would look to buy this on a pullback more so than a weak stock, but I would also give it some time.
Right, so it just shows you how some things are a trade, some things aren't. And as an accumulate after the earnings, it made sense. Trying to play for a breakout trade as a trader for cash flow, it gave you 2 days. If you go back to the chart one more time, the reason why we listed it, like as an investor, if you were accumulating tier 1, great. Here's where you had your momentum move as a momentum trader. Not only did you have a breakout, you had a little follow through. I know a lot of guys sold it on the second day, because typically, actually this was like the fourth day, 1, 2, 3 on the fourth up day, you always sell some. And then if you have a high level stop, because a lot of these breakouts are somewhat failing, and in June, July, when you have a market under pressure and you have complicated headlines all around the world, you don't chase things. So now it came back in, it's retesting this area. I would say tomorrow, short term, look at 41.66 as a pivot. Maybe it trades below it and you get some kind of RedDog reversal into this 21-day moving average. Longer term, I think it's a go-to stock. Short term, you had your momentum move, it's coming back in. I think it's pretty crucial that it holds this area. If it doesn't, it's going to come back into the base, and you have the 21-day right around 40.96, and then even down to here if the market gets really pressured, 39.60. And then lastly, on a macro level, all bets will be off if it starts breaking below this 38 and gets into that gap.
Okay.
All right.
I think we have one more question here. It is from Darkwing00. He wants to know what the chart of HUN is telling you.
HUN.
Yes.
I'll give that to Laz.
Thanks.
My honey, HUN, hun.
Okay, let's take a look here. Let me just let me get my bearings here on this chart. I always start big. I start weekly. Gives me just a general, very, very broad stroke of what's happening. Shows me a picture of strength, weakness, or possibly no trend at all. This to me looks like it could be setting up for lower prices. You do have flat support down here, at the $8, $9 area. That's, much, much lower. But again, we have to respect what prices told us here. Little bit of a 3-bar bounce here. Again, we broke down, a little 3-bar bounce, tailing down so far this week. So this tells me, this is setting up for possibly another trade down. I would bet, it's not necessarily a trade I would take or look to take, but if you're in this, be very, very careful. I'd love to see it recapture 14, but at this point, it's just not a stock that, to me, warrants an actionable type of trade. Unfortunately, there's just not a whole lot to say here. I do think it could be, tempting to pull back to that, 11.5 area, this, little micro area of support that it held. I think that'll be the real test here. But, for the way I look at things, and there's probably better trades on the board.
And just to quickly add in there, because it's funny when I don't trade this name, I don't know the name, but you look at the chart, and one question was, I'm just going to apply it to this. If you don't know a chart, you don't know the name, will you trade it based on the technicals? And if you look at this, clear as day, not being involved psychologically, you look at the chart, you'll see that, you had a decent chart for a while until it broke this this uptrend. Okay, it broke the uptrend. Something happened here that was pretty potent to the downside, led to further downside, and all you really did here so far is get a retracement back up. It came back up, and it didn't take back more than 50% of this potent down move, which controlled direction, and that was your your sell setup. And now at this point, I would say it's pretty much broken, and it's a non-event. It's not an investment or a trade. And next point of reference right here is 1258, and then obviously the lows. But overall, this was your exit. This was the day that controlled the down direction. Here's your igniting bar, which gave you a little follow through, but still it's being controlled by this major news or whatever happened here. So if it doesn't hold this area, I would say avoid it. It doesn't look like anything really worth your time, to agree with Laz.
All right, guys, this has been fun, but
so much fun.
Yes, lots of fun.
More fun than happy hour tonight?
Well, that can still happen. It's early. Going into next week, what are you guys thinking?
I'll just start with that. I guess you would think that they wouldn't let the market fall apart because Tuesday is T+3 before the end of the month, before the half a year is over. You would think that strong stocks will still have somewhat of a bid because people want to be marked up. But at this point, there's maybe that much geopolitical risk or world slowing risk, or who knows what it is. You have yields in Spain up, in Italy up. You have all these problems out there, so you can't think of a thesis if the market doesn't confirm it. I was in the camp that we watched the retracement rules, and we could probably buy the 38.2% retracement for what could be continuation to the move. But if you look today at the potentness of this move, go to the chart, usually it controls direction. And right now, this day just engulfed the entire last 5. So we're into this area, which is kind of like retesting where we broke out from. So I would say if we can't take back this, just say 1340 area within the next 2-3 days, this bar will control the next direction, and the next direction takes you down to the 50% retracement or where we held over here. So I would say short-term, use today's low as a pivot. If you sold here and shorted when we broke this high level, you have the luxury of trying to test it in this area, but I think keeping it small and keeping it flexible would be the way to go into the end of the month. What do you think, Laz?
I mean, today's definitely a statement day. And I think it will lead to lower prices. I'm not, I'm going to take a stand on that one. Let me just remove these lines.
Why don't you like the lines?
I think today's a statement day. I think the market, hit key retracement levels. Hit the 618. 618's a big level. It's the golden ratio. I tweeted about it today. Utter rejection. We got the Fed news yesterday. Fed days generally are very whipsaw, which again, go back to yesterday and you can see that. And then today's the statement day. The market really tipped its hand. It let everybody know what it thought about what's going on in Washington. And above and beyond just the S&Ps or the spiders, from a perspective of a trader, somebody who trades stocks professionally for a living, I don't, and have not for quite some time, seen really any leadership. The banks all look terrible. Goldman can't even put together a 2-day bounce. JP Morgan has a broken chart. We saw, Wells Fargo go lower today, lower highs in place. So you can make the argument that things are changing and it's not a healthy landscape. Markets need leadership. They need things to, that can take us higher. So between, the headlines, the European news, the statement day we got today, the banks, to me, it just doesn't paint a very healthy, picture of optimism and higher prices. Personally speaking, I've been day trading. If we look at the spiders, and I'm going to explain why, because I think it's an interesting point. When you get in tapes like this, where it's very choppy, red, green, red, green, red, green. I talked about this last week.
The frog in the blender.
The frog in the blender.
Yeah.
It's very hard for swing traders or traders with longer term horizons to get what they want. And we're seeing that. One day doesn't necessarily dictate what happens the next day. So, today was definitely a statement day. I'm definitely going to keep an eye on, like I said, look for a sell setup on the 60-minute chart, for, like a 3 to 5 bar bounce on this time frame to re-enter. I wouldn't just be blindly shorting again. Have your rules in place. Like Scott said, a slight retracement into today wouldn't be surprise or even unhealthy. And, if in a day or two we can't really show any strength or the market can't really, tip its hand, we're going to go lower.
Right, but again, as an active trader, there's money to be made in both directions. And a lot of people said that this was a rally to be sold, but we also went from 1266 to 1360, 90 handles, a lot of tactical money there. So if you're a perma bear and you have a thesis, not saying Evan does, I'm just saying in general, because there are a lot of people out there that do, make sure you can handle it. Because if you rolled up those shorts, and on that Tuesday when things started to squeeze, it was hard to hold. So I think tactically is the way to go, and that's what we try and do here. We tactically approach the market for cash flow, and then at times when things are more clear, we try to ride the trend. First quarter, it was really easy to hold 15 positions, trade around them, make good money, and then for the move lower, it wasn't as easy to hold short because it happened fast, but there was fast money there. And now I still think you're in wait and see mode. Like we talked about last Friday, IBD put us in a market uptrend with the caveat that it typically fails in June and July from historical measures. So that means be involved, but don't be all in. And now with the daylight today, they probably go to rally under pressure. They probably won't put us back in market correction, but rally under pressure meaning like, oh, hold on a little bit. Make sure your buys are very selective. And if we see another day like this, we're back in correction mode, and we could probably go see those lows and maybe make new lows. So at this point, there's a lot of tactical money out there, and there might not be group leadership, but there are stocks out there that are making new highs or new move highs that you could stay with as a macro investor, whether it was Walmart, whether it was Target, whether it was eBay recently, or who knows. There's a lot of stocks out there that you could still be involved in. If you're not going to be tactically trading the market every day like we do, but that's more of a swing trade or a macro trade, which we have a course for that too. So there's something for everyone. The most important thing I think is you have to figure out your time frame, figure out your risk, and then have a thesis and let your market confirm it with the plan. And the plan trader is what trader?
Profitable, Scott.
There you go, profitable trader. And let's turn it to Vicki to clean it up and close it up, because that's what she's good at.
Is it?
Sweep it up, Vicki.
All right, guys. It was fun. Thanks for having me.
Thanks,
All right,
Vic.
see you next week.
Thanks, everybody.
Okay.